Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Boyajan, currency analyst, and today is Monday, November the 6th. Today we're going to be looking at the dollar yen, the euro dollar, the pound dollar, and the Aussie dollar pairs. So let's start first with dollar yen. We can see here that there is some strong upside momentum in the short term. RSI is close to 70, although it hasn't quite reached overbought levels, suggesting there is scope for additional gains in the near term. We saw prices hitting a near 8 months high of 114.73 earlier today. Further gains, we should see prices targeting the 161.8% Fibonacci retracement level of that down leg from 114.44 to 112.95. That's the 115.35 level, and further up we have the 116.85 as another potential resistance target. If you do see, though, deterioration in that upside momentum in the short term, support should come around 113.70. That's the 50% Fibonacci, and then we have the 113 handle, which is just above that low from late October, 112.95. And then another major support to the downside is that low from mid-October, 111.64, and that's also just below the 200-day moving average, suggesting that potential important support level around that area. In the medium term, the outlook for dollar yen is bullish. We can see the formation of a steady uptrend since September. MACD is also in very much positive territory, although it is just below its red signal line. A move above the red signal line would suggest a further strengthening of that upside momentum. Moving now on to euro dollar, we can see since dropping below its neckline, euro dollar has been looking rather more bearish. The medium-term picture, perhaps you could say it's too early to say it's bearish. It's definitely neutral to bearish. If we see prices breaking below that major support, immediate support here at the moment around 1.1574, that would confirm the bearish outlook in the medium term. In the near term, though, it's looking a bit more neutral. But again, though, the risk is to the downside. The key support levels below 1.1574 is the 1.15 handle, and then the 1.1385 level. Those are the 161.8 and 261.8% Fibonacci retracement levels of that up leg from 1.1574 to 1.1689, and that 1.1689 is an important resistance level on the upside. So is that neckline around 1.1660. A break above those levels, we could then see resistance coming from the 1.1750 area, followed by the 1.18 area, which is currently where the 50-day moving average is. But we would need to see a break above 1.1879. That's the peak from early October. That's a break above that level, then we would see some stronger signs that of a shift to back to more bullish picture. Let's move on to pound dollar now. We can see that the pair has been confined to range between 1.3026 and 1.3340. Prices twice failed to break above 1.3340, first in mid-October and then early in November. A break above 1.3340 would signal a shift to more bullish bias from the current neutral one, whereas to the downside, a break below 1.3026 would signal a shift to a bearish one. We can see that support level first came into force in early October and then twice early in November. So that's immediate support there around 1.3330, and then immediate resistance, we have the 10-count cent line around 1.3177, and then not too far above that, the bottom of the Ichimoku cloud at 1.32. A break above 1.32 would help would help the pair gain further momentum to the upside. At the moment, though, it is very much neutral, both in the short and medium term. Finally, let's look at Aussie dollar. We can see the downtrend has been forming following the formation of the lower highs and the lower lows. Although during the past week it's pretty much been range bound, hovering around the 200-day moving average. A key support there is 0.7624. A break below that would further reinforce the bearish outlook in the medium term, and would also shift the near-term bias to a bearish one from the current neutral one. We have support coming at the moment at around 0.7730. A break above that level would help eliminate any downside risk we have at the moment. Though for a stronger shift to a more bullish bias, at least in the short term, we would see prices rise above the 0.78 handle. We have potential resistance at around 0.7815. That's the 50% Fibonacci retracement of the up leg from 0.7730 to 0.7897. Then we've got the 50-day moving average at the 23.6% Fibonacci at 0.7857, and then that peak just below 0.79 in mid-October. A break above 0.79 would definitely help shift the outlook to a more bullish one. At the moment, though, it is looking rather bearish for Aussie dollar. That's it from me. Thank you very much for watching and have a great day.